right, folks, in the midst of this pandemic, I'm sure many investors would agree that the healthcare sector of the market is by far one of the most advantageous places to be paying attention to right now, considering we saw Warren Buffett pick up Pfizer, Merck & Company, and even Bristol Myers. A company reached out to me to ask to do a review on CB2 Insights, and even though this is a small cap healthcare company, they are trying to tackle some fairly large problems in the US with the over 40 million people that don't have access to healthcare, along with using their own custom software to expand efficiencies within the healthcare market. And considering they have an underlying positive asset value and a lot of expansion into the future, I really thought this was worth a look into. And they currently trade for 73 cents and are trading up from their IPO of 124%. And year to date, guys, the company is trading up roughly 469% with a price target on it right now of $1.10. So this is going to be a really interesting deep dive. If you are interested in kind of growing sectors of the healthcare market, I am going to leave a full disclosure in the description below. But if you guys appreciate all the homework I bring to your wonderful computer screens, consider hitting that like button and let's jump right into this. Welcome back, passive income investors alike. Now, diving down into this, I'm going to start with some of the bull thesis surrounding this. We're going to take a look at the company, and then we're going to dive down into the balance sheet, because a lot of analysts right now are claiming that this company is severely undervalued against its peers, and we're going to see more about that when we get into the event presentation. But looking at the expansion of service in the current patient base, over the next 12 months, the company expects to see a robust growth as it expands into medical services to include traditional and conventional treatment alongside its current alternative-focused approach to its over 100,000 patient base in the US. And over the next 12 months, the company expects to begin reopening its clinics shut down due to the CV pandemic that happened in March. The clinics reopening beginning in Q1 of 2021. Now, I wasn't even aware that these clinics were shut down, but when we actually get into their balance sheet, guys, I think you're gonna be pretty impressed by the revenue they're still generating, which impressively comes from a subscription-based service from the overwhelming amount of people that don't have access to affordable healthcare. But we're gonna explain more about that in a little bit. But the company is currently earns around $1.50 per patient per year based on one visit per year. With the expansion of primary care, the company expects 3 to 4 visits per year per patient on average, resulting in improved service for patients and an improvement in the overall patient economics, largely reimbursed through insurance payers. Now, patients will continue to be supported via telemedicine for services that can be delivered with the necessary standard of care remotely, and the company expects to begin actually administering the CV vaccine. Now, taking a look at the most interesting part of this company is the subscription-based service, and through the subscription service, the company expects to enter an addressable market of 40 million Americans that are largely underserved due to the high cost of healthcare in the US. This disruptive model has already begun to see traction, with patients already showing strong demand in the states where the company has begun launching its services. The company is working closely with strategic partners in the US to develop key messaging and marketing metrics that will enable the scale of its marketing efforts over the next 12 months. Within the product offering, anyone who is under or uninsured can subscribe to an annual subscription of $199 per year for unlimited access to the telehealth provider for urgent care needs. This company is believed to expand this offering within existing states over the next 12 months and will look to add new states in the following period. Since the subscription model works with the existing company's provider largely salaried within the existing business model, the company will be able to profitably provide this service to patients. Additionally, this product targets a highly underdressed population that may continue to see further impact due to the large unemployment numbers resulting from job loss, obviously caused by the pandemic here, guys. But taking a look at the corporate overview, their clinical assets, they currently own 30 plus US clinics operating in 14 US states and including 3 international clinic affiliations with an annual registered patients of 120 plus thousand. And my favorite word in any public overview is digital assets, because that is the revolution we are heading into. With global markets served, they got 4 global markets served with an annual patient interaction of over 200,000 and a total data points collected of 2.5 million. It's going to be neat to see how they kind of compete in the healthcare software market. And just looking at the prolonged growth, aside from everything we talked about, let's just talk about the strategic and aggregative acquisitions. They're claiming that it's a highly fragmented industry with very few national players targeting traditional primary care and urgent care clinics, and immediate and low-cost access to new markets to enable a significant economic of scale and improve the overall profitability of the business. And they recently completed and announced a transaction that's going to add $5 million in incremental revenue and add 1 million to their incremental EBITDA, and including a pipeline of deals that could equate to 20 million in profits. So considering this company has a good foundation already, it's going to be really neat to see how these kind of lower income served US citizens that just aren't getting proper healthcare are going to be lined up to sign up to this for $200 a year, and if it's going to meet the needs they require, because I'm sure many of these people would love to just talk to a doctor. Now, even though this company trades at a significant discount, I think it comes within fair reason considering it trades on the OTC market, which comes with more speculative risk, but being in the healthcare sector, which comes with much more stability, the fact that they have an underlying fundamental base that's keeping them going right now with a lot of future expansion. If this is one of these companies that if you pick up and they actually get some traction off the ground and end up finding themselves on a major listing sometime down the road, I mean, you could see some really massive explosive growth coming out of this. And we're going to dive down into the balance sheet just to see how robust this company's doing, and just taking a look at their basic ownership summary right now. It's kind of neat to see that 55% of this company is owned by the public market, which would be nice to see a little bit more institutional buyers in there, but with 15% and 30% being owned by insiders, it is fairly nicely diversified, meaning nothing really makes up enough to do any massive mood swings to the stock, which usually offers a little bit more stability down the road. But just taking a look, guys, right now they have a total asset of about $14.4 million, minusing out the liabilities of $8.8 million. They have an underlying asset right now right around $6 million, which is pretty small in comparison to the market cap, $107 million. But let's just take a look at the revenues to see if we can equate to that $100 million valuation. And this is where things get really interesting, because obviously the software side and the technology side is where we're going to see kind of a lot of the hype coming from. And just taking a look at the 6-month end leading into September here, guys, in 2019, their software services only did 22,000 in sales, at which in 2020, they are already up to 46,000. So they've doubled their software revenues, which is going to be incredible if they can continue that 100% growth rate in that sector. And just taking a look at contract research solutions, they did 32,000 in 2019, which this year they're up to 122,000. And even on the clinical side, guys, where they're seeing the hit from the pandemic, it isn't even that drastic. Going from 10 million in sales in 2019 to 9.7 million in sales in 2020, which will likely to see a full rebound going into the first quarter of next year, considering they're going to be part of the vaccination with the CB virus, considering their clinics are going to be fully operational again, guys. This is actually a really robust balance sheet for a growth company. Presuming this is going to be a continuation growth story, again, guys, this really isn't that bad of a company to be looking into. Now, putting all of that aside, in conclusion here, guys, of many of the penny stocks I have looked at recently, I'm actually glad this company reached out to me, because these are the companies that I actually like to review. They come with a much more kind of staple to society. They're trying to benefit the world, and they're doing it in a manner that they're actually proving to be profitable on many different lengths, giving you a little bit more diversification. So I'm going to pass the question off to you guys. What do you think about this company? Let me know in the comment section below. I'm going to leave a full Bolt These article in the description as well if you want to continue reading into it. But in light of all this, stay cool, stay awesome, and I look forward to catching you guys tomorrow.